Rivian reported earnings after the market closed on Thursday, and no surprise, the company did make a gross profit. Now, that means that the units that they actually made and sold didn't lose money just physically making them. It doesn't cover their sales and marketing. It doesn't cover their R&D, development expense, capital expenditures, any of that stuff. But they made a gross profit in the quarter. That also includes $300 million worth of revenue that came from electric vehicle credits. So keep that in mind. The numbers are not quite as good as the market, as the commentary and management wants you to think. But I also want to dig a little bit deeper into this because Rivian has done some really interesting things over the past year. Their partnership with Volkswagen is now moving towards having a real impact on the business. That's partially going to be impacted by software and services revenue. But it also means that they're consolidating that joint venture on their balance sheet, makes it a little bit more difficult to actually see what's going on at the business. So I'm going to dig through all this today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsored with Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start by looking at the market's reaction because I thought this was interesting. Things were up after hours a little bit, but as I'm recording on Friday, it certainly looks like the stock is down and going to head lower to end the week. We pull back for a full year, shares are down 15%. In 5 years, obviously a collapse since the company IPO'd and was one of the hottest stocks on the market. But let's start with a couple of the highlights that management talked about. Achieved a gross profit of $170 million. I'll get into some of those numbers. They also closed the joint venture with Volkswagen Group. That actually did close. That included $1 billion worth of investment that Volkswagen had made into Rivian that used to be debt. It was basically temporarily debt, and then that was turned into equity. That happened during the fourth quarter, so that's why the debt actually went down by about $1 billion. But the DOE's $6.6 billion loan, keep in mind, Rivian doesn't have that money. That's something that I really think we need to keep in mind because it's very possible that the Trump administration isn't going to release that money. I don't know the details behind that, but management was asked about this and basically just said, you know what, we're in supportive of all the things that the Trump administration wants to do with bringing jobs and manufacturing onshore. Didn't say anything about, you know what, we expect this money to be in our bank account on this date. So just a little warning there. If you think that they actually have the money, they don't. And they're also working on finishing up an expansion to their Normal, Illinois facility. They put a nice picture of that here. That's going to allow them to make the R2 vehicle in 2026, said first half of 2026. So expect that about the middle of the year. There's a lot of things to go through, but I wanted to start with the high level numbers. For the fourth quarter, deliveries were 14,183 vehicles. Production was 12,727. So what that means is that they reduced their inventory. That's going to help their cash flow because instead of building inventory, which they had been doing basically since their IPO, they're now reducing that inventory. That will eventually turn. If they're able to produce 500,000 units per year, and let's say they have 30 days worth of inventory, a relatively small number, you would expect it to be more like 50, 60 days normally in the auto industry, especially when you own inventory throughout the full supply chain. That's going to be a massive, massive drag on their balance sheet. Just something to keep in mind. For each 30 days, it's about $2 billion worth of inventory, probably even a little bit more than that, just based on the $45,000 price point for the R2. So as they grow, this is why it's tough to grow as a business. It takes a lot of capital to grow because they had to do things like build up inventory. But total revenue for the quarter, $1.7 billion, $214 million of that was software and services. Management talked about that. There's a lot of pieces to that. Part of it was those sales to the Volkswagen joint venture. And that was actually pretty high gross margin, that joint venture and software and services revenue. So that's where you get to total gross margin of 10% or $170 million. Now, that does include $300 million of EV credits that other companies are buying. That hit entirely in this quarter. So despite the fact that they were selling credits from the first quarter, in the fourth quarter, you're kind of skewing the numbers. So just want to flag another thing that made the fourth quarter look great, but this is not going to continue. They're not going to be this profitable going forward. Their operating expenses came down year over year, up a little bit quarter over quarter. Again, they are also consolidating the joint venture. So everything about that business is going to be on their income statement and their balance sheet. Now I want to go to that balance sheet because I think this is where things get really tricky for Rivian really, really quickly. And it's something that a lot of investors just kind of gloss over. Right now, they have $7.7 billion worth of cash. But keep in mind, they also have $4.4 billion worth of debt. This does not include the $6.6 billion that could potentially come from the Department of Energy to build out the Georgia facility. That's going to be about a $5 billion investment. So figure if that money comes in, they'll be able to build Georgia. If it doesn't, they're probably not going to be able to afford it. There's just no way that they're going to be able to raise that kind of money. It's just going to be very unlikely for them to be able to raise that kind of money. I also wanted to look at their cash flows. Look at the cash flow improvement year over year. 4.9 billion in operating cash losses a year ago, now just 1.7 billion. Sounds great, right? Well, look at these numbers. Inventory was being built up during 2023 and it was being lowered in 2024. So that's a $1.9 billion difference between these two. The other one that's a massive difference is deferred revenue. That is from this investment from the Volkswagen Group. The consideration associated with closing the joint venture totals $1.96 billion, which we recognize in revenue over approximately 4 years, with the amount of revenue recognized gradually growing in each period. So that cash is on Rivian's balance sheet. Even if it's consolidated from the joint venture, it's on their balance sheet, but it is not revenue that has been earned yet. So really, Rivian itself, Rivian, the auto company, has more like $5.7 billion worth of cash, not 7.7. And they do have that $4.4 billion worth of debt. But everything's heading in the right direction, right? They've now upgraded their R1 vehicles. Those are higher margin, they're lower cost. They're going to be able to ramp up that production. I think that's the assumption, isn't it? That everything is going to go great. They're going to just keep growing their production and then fold R2 in, not only in Normal, Illinois, but also in Georgia. But what are they actually guiding for? They're guiding for their deliveries to potentially be down in 2025. Why are deliveries going to be down? This is something that I have been talking about for a while, and I always get pushback. But the quote from management is really important. Deliveries are only expected to be 8,000 in Q1. Why? Because of a challenging demand environment, particularly driven by the impact of the fires in Los Angeles, which have historically been one of our largest markets. They're blaming the fires in Los Angeles for not having demand of more than 8,000 vehicles. That is pretty jarring. Due to these dynamics, we anticipate deliveries to be approximately 8,000 vehicles in Q1 and production to be 14,000 vehicles. So again, they're going to be building inventory. That's going to take a hit on the balance sheet. But they're going to be building inventory to help mitigate the impacts of the 1-month plant shutdown that is going to happen in the second half of the year. Take all of this together, and what they are telling you is that there is only a limited amount of demand for R1 vehicles. And it's not just R1s, it's EDVs as well. That is included in their production and deliveries. So all of this is telling you that Rivian has a demand problem. But it's okay, the R2 is coming, and that's going to save everything, right? Well, one, we don't know what the demand for R2 is going to be or ultimately what those margins are going to be. So it's very possible that's just another break-even vehicle and they're still not going to be able to cover their costs. Remember, operating losses are $1.7 billion in the year, and that includes $1.6 billion in deferred revenue that's not going to repeat itself. And inventory was a benefit, and that's going to be a headwind in the future. So likely operating losses on a normalized basis are more like $3 to $3.5 billion. Now go back to that $5.7 billion in cash that's on Rivian's balance sheet, not the joint venture, but Rivian's balance sheet. And you get to the point where that cash that's on the balance sheet burns out by the end of 2026. R2 is going to cost a lot to actually get into production. They're going to have more capital expenditures in the meantime. That CapEx was $1.1 billion in 2024. That's going to likely increase, especially as they start to try to build out the Georgia facility. And now we're hanging on a $6.6 billion loan from the Department of Energy, which will allow them to build the Georgia facility to expand R2 even further, increasing their supply, when we still don't know what the demand or margins are for R2 or ultimately R3. Hanging over all of this is the fact that there's already $4.4 billion in debt on the balance sheet, and that $6.6 billion coming from the Department of Energy, that is not a gift, that is a loan. After Georgia is completed, Rivian will have $11 billion worth of debt, and we don't even know if they can get to profitability and cover not only the cost to make vehicles, get to gross profit, but also get to operating profit. Just assuming that they have $3.5 billion worth of operating expenses, which will likely go up as they ramp up production and have to build out sales infrastructure and all those kinds of things. But just assume that that's their operating expenses going forward. They're going to have to make $5,700 in gross profit per vehicle produced just to cover their operating expenses once Georgia is built, and they're actually making 615,000 vehicles per year. A lot of the benefits that you saw in the fourth quarter were one-time benefits. The tax credits that were sold were one-time benefits. The $2 billion that hit the balance sheet because of the Volkswagen joint venture, that was a one-time benefit. Inventory reducing was a one-time benefit. Don't look at the fourth quarter of 2024 and assume that that's what the business is going to look like in the future. This is a company that is not growing again for the third straight year in 2025. They're going to lose more money, burn through more of their cash, and they're going to rely on $6.6 billion coming from the Department of Energy to potentially, maybe by the end of the decade, get to operating profit. I don't think that's a good position for any of these companies to be in at the same time. You have all kinds of other EV manufacturers increasing their production. And guess what? They're increasing their production as demand for EVs, especially in the US, declines. I still don't think this is a good operating company. I think the cash flow situation for them looks worse and worse by the quarter, and that's going to continue into 2025. They have a demand problem. They said it themselves, and that's something that should ultimately worry investors. But what do you think about Rivian today? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.